weekend, all. I'm Epstein, and here you are with your weekend edition of your SPDR-ETF stock market wrap-up. And this is for Friday, halfway through September 15th, 2023. Well, today was triple witching. So we saw option expiration, futures expiration, all kinds of little things happening, and the stock market beaten up. In fact, if you take a look behind me, there's an awful lot of red. The metals were basically higher today. The euro was up against the dollar at this point. Disney was up as it's in talks, exploratory as they may be, about potentially getting out of either ABC, ESPN, something somewhere. And the talks got things going. My wife's looking at traveling again, so I knew UAL would go up, or one of the airlines that she went with. And interesting, GM was up, Rivian was up, Ford was down, and Tesla was down. Tesla's not even a union shop, so interesting time. We woke up and saw that not 146,000 workers were on the picket line, and there were fears that that could be the case. Instead, it's a grand total of 12,700. Now, they put everybody out. Just do your math. They have 825 million in the kitty for the strike. If they put everybody out on strike and they gave $500 a week to everybody, you're going to be going through seven numbers fast. It takes nothing to go through $7 million like that. That's the point. You got to be careful. They got to be very careful. Go through 70 million and wipe out the funds. All right. So it's going to be done in a way to hurt and to get a point done. Everybody's got to decide when they'll talk. I pray it doesn't take as long as the Screen Actors Guild and the writers to talk to people, because that's 136 days or something that it's been going on. And I understand that they do have talks scheduled again. You would think they'd make something, but this is how you break people. You want a lot more, but you break the actors, the writers, and all the different little companies that support the industry. Well, the same thing's happening. President Biden can't do anything with this because he needs those union votes. So his thing will be, well, we'll go out. Let's see what we can do to help the small suppliers to these companies in some manner. Okay. But, we can't step in because the election's around the corner. He's counting on those votes. There's only so much he can do. He can't put the pressure on the way you think. So we're through with that. So you put this all together, and now you get the Fed coming up this week, and that comes out on Wednesday. And I look at all the numbers that we had this week, and I think you'd be hard-pressed to put me in a room and everybody not say the numbers came in hot. I think to a person, they'd say yes. Where the divergence would happen, they're going to tell you they have the crystal ball and things are weakening in such a way within the numbers. They're going to come down. Even the consumer sentiment numbers, what the University of Michigan is projecting inflation might be doing in another year. But that's not what the data is. That's a projection number. The data is hot. Whether the Fed listens or not, they're probably not going to. All the trade that I know, the whole trade seems to think that the Fed is going to pause this coming Wednesday. I would like to see them go that other quarter point. I'm all by myself, and the reason is they said they're data dependent. Inflation hasn't been broken. The economy is acting, everything I'm reading is still in pretty darn good shape, including labor. Where does the quarter point hurt? And it's the projections again that, Ira, you're wrong. It's going to, you don't see it all. It's coming. It's an avalanche coming, and it's all going to fall. And you'll see we're right in not adding that point. We don't have to then cut as quick as we did or hurt the economy. I get the argument. Doesn't mean I have to agree with it. As I said, we're about charts here, not fundamentals. And in the chart action, we were talking Apple because we had the release. Doesn't it seem like it was weeks ago? It was only the 12th. I went in today. I had to replace a box on my cable because I told you I had all these internet problems. Figured I'll take care of a TV issue I had too. And there, of course, were they didn't have the Apple 15 out on display yet, but I asked about it, and they had no idea. How's that? Xfinity had no idea. I loved it. They told me that I can text them or they'll text me in the next day or two as they get everything put in. How could they not have an idea? This has been coming. It's beyond me. All right. So when I look at this chart, I see the market had gone up and it broke. Okay? We're analysts. We're chart analysts. What did it do? Well, when you take a look at it with the combination of this week, you certainly can't argue you've got peaks that are lower, and this break low took out that one. You're in a downtrend, a classic downtrend. If you believe that you have lower lows, lower highs, that's a downtrend. You'd have to go back over right here, 189.98, in order to break that pattern. The market closed underneath the 18-week moving average. Now, a lot of people use the 20. I know people that use the 21. It's still a zone. What do you use it for? You use it as a reference point. Most analysts that I know that understand moving averages, and there's a lot that use them, have no concept what they are. The theory is it's a filter on other indicators that you might use. When the market is over this number, you have a bullish bias. It's that simple. When it's under, I think you have a bearish bias. If the market is down, it often likes to go back and fight at that number. If the market's up, it likes to pull back to it and fight the battle at that number, looking for whatever the next event's going to be. At this time, this place, the trend is down. The next support, if the market falls, is the Bollinger Band. What's the algorithm Bollinger Band do? The theory of it, how it's put together, is that 95% of the time the market will trade within the band. The band moderates itself to the highs or lows of the market, and it will trade within those bands. So smart money, quote unquote, smarts around that, will say, hey, the first time you get up to a band and you actually hit it, that's a resistance point. The first time you get down to it, it's support. Does it mean you cannot work lower? No, you can. It's a support. But if you're selling under the band, you can generally do better if you're determined to sell by waiting for it to get over the band. Then eventually what you want to do is take with it and put momentum, because momentum's another filter of what's going on in the market. So I use 5 things. You're not seeing here all the moving averages I work with at all. This is for example, the 200 week. This green is the 100. You have the 18. Then I use another 2 averages that I don't even show here. I don't need that many lines on the chart for this. In my subscriber videos, my subscribers want me to put all the moving averages. And I walk them through it each day, and I hammer it to them, and they start to get it. You got lower highs, lower lows, momentum down, oversold. What is oversold? I view any number under 30 in the slow stochastic as oversold. The market can lock in like it did here, and it generally takes off with that when that's occurring. If it's over 80, and I don't have any where it really locked in on the downside to be under 20, because you haven't gone into what we call an embedded bearish reading in a very long time. So the market's in its corrective stage unless it gets back over on the current pattern, 189.98. The potential is there for the 169.5 zone. When I look at Microsoft, the trend has been up. But look what the market's doing. It's fighting a major battle at that 18-day average, a week average, I should say. It's up over it, then back down under it. Sideways action. In the process, when that happens, price will take the Bollinger Bands, the black lines, and they suddenly start wrapping their arms around the market. And it's not uncommon that you get sideways action for a bit. And from that sideways action, a new trend will develop most times. You started doing that right here. See how the bands were out and then they wrapped themselves? They're doing it again. And from there, the trend asserts itself. That's what I'm waiting for to happen here. In KRE, the SPDR ETF for the banks, well, it's going home. The settlement's 43.71. It settled over the 18-week average of 43.65. This is what you call in a market that has had, since really July, a bullish bias. It's been over the 18-week average of closes, a break within a market that's got that bullish bias, came down, fighting a battle for what's next. Close under 42.47 this week. and a full-fledged sell signal, the way that I define a sell signal, will show itself. And I'd be looking then for the 3803 before you get back over 4582. So this market's setting that up for me, from my technique. In MCHI, now the first thing I want to say is I fully understand that China is doing very selective things to boost the economy. They're leaving the property market away from them saying, hey, we're going to bail out. What they're doing is they're playing with mortgages. They're playing with who can buy as a first-time buyer. They're changing the rules on that. They're changing how much money you put down, the interest rate you do from there. Then they have been lowering recently how much they'll pay you on bank balances, getting you to go out and spend. Then they're coming in and they're talking of maybe doing some infrastructure in some areas, so on and so forth. This is all good, not bad. Gradually, we're starting to see some results, and at the very ranks of everything, maybe there's not a really empty abyss. I don't know what they're going to do about their property market. I do know Country Garden had a great week. It was able to stave off its creditors, get 3 more years to work out the deal. This is a phenomenal thing for them. They're not out of business, and they're the biggest private developer. So until and unless the market takes out 46.44, you're in an oversold area. You've already hit the Bollinger Band. It's looking for something to do. Should the market get over 46.44, I would then get, if it doesn't first take out last week, not this week's low, of 43.63, that would be a buy signal looking for the market on the upper side. As long as you don't get over 46.44, rallies are still getting sold in the marketplace as you're under the 18-week average, and you do have the pattern of lower highs, lower lows. In the industrial sector, with the close of business today, you're back in a bearish trend. Lower highs, lower lows, momentum clearly turning down. Could the market reach all the way down here? It's a potential target. The market would have to go back over 109.15 to negate this pattern, the way it's set up right now. I think the pros are selling short at 105.63 with stops over that number. In XLE, a bit of a different game. You have what's called the embedded reading, which means to me that now that the market, even though you had today a down day, on a further break, I think the pros will buy this XLE. I think they will bail if the red line closes under 79. It's at 92 right now. There is a moving average that I don't show here, which is the number I think they'll buy at under the circumstance. Now, for those of you that have taken my enhanced Bollinger Band course, this is classic what we're talking about. For those of you that want to learn it, at the end of this, I'll be running an ad to show you how you can get to our site. And by the way, at any point, you can get to our site to learn about this, the Bollinger Bands. Move your cursor up here. It'll take you right to that area. Got it? It's irapstein.com, by the way, under the word education. Okay? But that's running the band. On pullbacks, there's a way to come in. The key is not to first take out the high of this week. When I look at UUP, it's got its embedded reading. Also, you have an outside week up. So you got 2 plays here. Number one, what I don't want to see on a pullback right away is taking out this week's low. But if you embedding means that you get 3 weeks in a row, since it's a weekly chart, where the numbers are over 80. You've got the 8th, the 15th, we just went through, and last week, the week before that, you've got your 3-week minimum. So until the red line's under 79, I will be using pullbacks in the market for potential buys out of the market if the market gets a reading under 79, and that's what I'll be explaining to my clients. In GLD, what we have right here is a market going sideways momentum that had a nice rally today. So the market is trying to do what? The marketplace today used the excuse of triple witching to also even up positions all over, be it in the futures, whatever, in front of Wednesday's FOMC meeting. The die is cast. Is the Fed going to sit back and do nothing? We just saw the dollar get extremely strong at the expense of the euro. The euro went for the 25 basis point hike. The Fed most likely, because everybody thinks I'm wrong, in that while I want them to do a 25 basis point hike, I'm with the other people. I don't think they will, and I think they should. Just because the math says no doesn't mean that's the right thing to do. So what I think they'll do is he'll come out and say, we're going to pause, but we're leaving the door open to go higher. Well, that's just what Ms. Lagarde said. She did it a little differently, slightly. She said, we're going up now, but we understand the problem. And the fallout's terrible in the European Union because you're not dealing with a nation like us. You're dealing with nations, an S at the end of it, and there's a lot of them, and everybody's got their own opinion. But in any case, if gold, that's a big if, but if gold were to get over 181.12, you'd negate the downtrend. At this point, you're still in a downtrend. You have a clear lower highs, lower lows. You're under the 18-week average. So until that's taken out, I'm still in the bear camp. What you've had on the daily charts, all the metals, the miners, took off to the upside. All that you've done on the weekly charts is bring you back up to the resistance area where the market is waiting. This a bear market rally is the way to look at it. At 30.54, 30.11 is the 100-week and the 18-week average of closes. That's your resistance point. The high was 29.89. The market's got to prove it can close over those numbers. If it does, for the very short term, that would throw the market bullish. But it's got to close there on Friday. Momentum-wise, the market is oversold. So we'll see which way it wants to go. Tesla, yeah, I know it was down, big deal. It's still bullish. And there could be another level coming here. What do I mean by that? I want you to look at the red line. That's your 18-week average. The green, the 100-week. Look at how they're coming together. You can get a bullish crossover, opening the door since it's in an uptrend already, and momentum is trying to turn up where this market could make a run at wherever that Bollinger Band comes in again. This is not bearish action. To negate this, always look at the way to how to negate it. You'd have to come back and take out 243.27. That would negate the uptrend. End of discussion. Game over. So where do I think the pros are looking? They'll look at that 100-week average as a possible support zone. Uber's approaching the upper Bollinger Band, not there, hasn't hit it. Market is in overbought condition. Daily chart is friendly, so is the weekly chart at this point. If it does embed, by the way, it just lost it. So this could be a trap as it never came back down to the 18-week, but it's really not because the market's gone up and made new highs over that one. So it's in a bullish configuration at this point. In Dryden, DRI, Darden Gardens, Darden Gardens. I took the DRA with it. Darden Restaurants, not Gardens, Darden Restaurants. We had covered this. Notice how the market's made it stand. Again, at what number? That was the lead market we had a week ago. I said I thought it would go to the Bollinger Band and fight a battle there. Tell me we're not doing that and you're in an oversold condition. Again, learn how to work with these Bollinger Bands. Google, what number is it up against? The Bollinger Band. Bullish? Absolutely. What's the market doing here? Is it trying to embed? Study this. First week where both numbers are over 80? Well, it's one of the weeks. What about last week? Oh my gosh, both numbers were over 80. What about the week before? Over 80. Therefore, according to my course, there's a way to buy this. I'm not going to tell you what it is here. Market has to do a certain thing. Again, this is all about the Bollinger Band. It's very, very important. How do you learn about it? Number one, you can click up here and you want to get to the course itself. You can take a look at the ad that's going to come up here. You can go to our website, irapstein.com, under the word education, and then enhanced Bollinger Bands. Pretty simple. I'm Ira. You have a great weekend. I will see you Monday. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time. And on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein, on the road to your education.